These are interest rates for car loans in the US. The cost of financing a car has increased by 54% thanks to the Fed's very aggressive high cycle. Despite this, Tesla is about to post another record-breaking quarter. So today I'm gonna go over how Tesla has made high interest rates pretty much irrelevant, both from a customer perspective and also from an investment perspective. For a year and a half, investing in the stock market has revolved around Jay Powell and Fed fund rates. And honestly, I'm just tired of it. I'm tired of pretending that this shit even matters, to be honest. So first, let's take a look from a customer perspective. Alright, so a Tesla Model 3 used to cost $48,000 at the highest point back in June 16 of 2022. Today, the same car costs about $43,000 or $36,000 if you count the new EV incentive. So if you were to buy it back in June at a 4.2% interest rates and you got a normal loan, so for example a $5,000 down loan, then your monthly cost would be about $872. Today, the same car loan would have a much higher interest rate of 6.5% and the monthly cost on that would be $808 due to a much lower ASP. Now what is crazy is if you take the Inflation Reduction Act incentive into account, then the monthly cost drops to $651. So buying a Tesla Model 3 today is 34% cheaper than buying it when interest rates were the lowest back in June last year. And the story is similar with other models from Tesla. They've all gone down in price to a point where it more than compensates for the higher interest rate. So Tesla has decided to wipe their ass with Fed fund rates and instead more than compensated with much lower cost per car. And remember, the main driver for a customer is the monthly cost. It's not necessarily the interest rates. So if a customer sees $878 per month and then they see $651 per month, which one do you think is going to have an increased amount of demand? Now, this is not the case for other OEMs because they don't enjoy the same gross margins that Tesla has, so they don't have as much leeway to cut prices. In fact, Ford just announced that they were just losing money in every single EV they sold last year. And that's Ford. They have a very successful EV launch in my opinion with the Mach-E. The Mach-E is actually pretty cool. But what about internationally? Well, let's just take a look at China, which is the most competitive EV market in the world in my opinion. Also the biggest. So other EVs a week ago got together and they just begged the CAAM to make Tesla's prices stable because they were getting pretty much decimated after the latest price cuts back in January. So Tesla doesn't seem to be having any problems in China or Europe either. In fact, analyst estimates for the Q4 delivery report, which by the way we're gonna have in a couple of days, is gonna come at 423,000 cars, and that will be a new delivery record. So from our customer perspective, Tesla is selling more than ever and they are making Teslas more affordable than ever despite having much higher interest rates. But the biggest issue that I noticed in the stock market is that the investment community has been obsessed with interest rates for, let's just say, 2 years now. And I would argue that this is a big waste of time.
So I've always said, if you spend 14 minutes a year on economics, you've wasted 12 minutes.
I mean, it'd be incredible to predict what interest rates are going to be in the next 12 months. It'd be awesome. But the GOAT himself, Peter Lynch, once said that if you can predict interest rates for 3 times in a row, you'd be a billionaire in no time. And I don't see that many billionaires going around. So I would say it's actually pretty hard to predict. Even Jay Powell cannot predict what interest rates are going to do in the next 12 months. And to prove that, you could just see at their estimates, their guidance that they had 18 months ago. It was closer to 1% than it was to 5%. And here we are at 5%. So why waste so much time analyzing a metric and trying to prognosticate something that none of us can predict, to be honest? And more important than that is if I spend a bunch of my time analyzing what interest rates are gonna do and not being able to predict it, it's time that I'm not spending researching great companies and great stocks. In the case of Tesla, nothing that the Fed does in the next 6 months is gonna actually affect the long-term earning potential of the company. Earnings at the end of the day will drive long-term value for not just Tesla, but any stock. And that has been the case for 120 years. I would argue it's gonna continue to be the case in the next 120 years. But that's just a little hunch that I have. So anyway, that's just a little bit of a rant because I see that everybody, all they talk about is interest rates all day long. What the Fed's gonna do, and that's most of the stock research that I sometimes do and that other people do. But it's important to remember that this is just star science or technical analysis. It's very fun. I like doing it. You know, it's entertaining as fuck, but it's not gonna make me rich. It's not gonna make anybody rich because none of us can predict interest rates the same way nobody can predict a breakout or a technical analysis resistance or any of that with any degree of certainty or replicability. Or at least that's how I feel about it. But what do I know? You know, that's just my 2 cents. And anyway, that's it. That's all I have for this video. Thank you very much for watching and I'll see you next time.